Well, joining us now is Ivy Zelman, Zelman and Associates Executive Vice President. And Ivy, it's great to have you back on the show. And that's actually where I'm going to start with you with just a broader question on what we've seen. It's really been just a downtrend looking at the home builder stocks. It's the second worst performing subsector in the S&P since November, since the election. And we know the data has not been particularly great. Where does it go from here?
Well, thanks for having me, Morgan. I think overall the spring selling season is off to a soft start, and that headwind in itself is creating some fear and pressure on stocks. With that said, though, you have risk of inflation from tariffs. You've got deportation risk, which is certainly a concern with respect to construction workers, which could put more inflation in labor. And then you now have softer overall job growth with respect to federal layoffs. And, you're definitely have a wall of worry. And builders today do not have pricing power. They're offering concessions. So if they have higher costs, and certainly they have higher land costs that are running through the P&L, that's going to put margin pressure on them. So if your investors are saying, why should I own these stocks? Now, rates coming down will help. And some of the companies are doing better than others. So I think that the Toll Brothers earnings got everybody thinking about where the spring selling season is going. And right now it's not a disaster, but it's off to a slow start.
So then would you buy Toll Brothers at these levels, or what do you see as potentially doing better in this environment?
Listen, the group as a whole is probably going to remain under pressure. Well, we look for where do we buy them blindly and say we want to buy the group, you probably have about another 20% downside. But if you have a longer term view and you're looking for which companies on a relative basis, we like Toll. That's our top performing. That's our top performer that we think will long term be the best stock to own because they have a more resilient customer base. Their consumer is at the high end where there's significant resiliency. So we like that. But I know in the near term that to own them right now is going to be difficult because the headwinds are not going to abate necessarily. February is off to a little bit better start. But I don't think it's going to be enough to overcome those headwinds that I mentioned earlier today.
Ivy, given the overall environment, and given, I feel like at least for the past 3-4 years, we've been like, well, the rich will bail out this company or the economy, et cetera. Is luxury a safe haven? Can you buy Toll here and feel like it's not too expensive where you're really exposed still to significant further downside?
I think buying Toll here fundamentally because of their customer base does make sense. But because of the way the group trades, they trade as a group, it's difficult to see Toll outperforming today with respect to, a lot of those uncertainties I mentioned. So if you had to own a name right now, I would buy Toll. So
what's the counterintuitive call in this situation? I guess, is there something that moves counter to overall these home builders that investors should be thinking about if they're thinking about hedging?
Well, if I understand your question correctly, you're asking why they would own them. What's the bull case? Is that what you're asking?
No,
Jeff?
I'm really wondering if there's a particular home builder or something else out there that you see, that you watch, where if the home builders are doing well, it's not, or if this thing is doing well, maybe it's a sign that the home builders are in trouble.
Well, I think that the home builders, the ecosystem we have, whether it be real estate brokers, mortgage companies, multifamily operators, single family rental, I mean, the whole ecosystem right now is under pressure. And I think that today it's very difficult to think that the building product companies that we also follow are going to have pricing power to pass along the higher costs associated with tariffs to the builders that are going to push back. So I don't think there's an alternative area that we're really excited about.